Actually, we are dealing with the ICA case study MCQs. Whenever there is a non-compliance of the, whenever there is a non-compliance with the laws and regulation, where we report in the audit report, nothing but it's reported under the other emphasis matter paragraph. Okay, it's reported under other emphasis matter paragraph. Okay, here it's an answer is nothing but CAH should be included in the others matter paragraph as per IC 706. Others matter paragraph included in the audit report. Okay, it's nothing but non-compliance will be included. Okay, and which is not the following a current year adjustment, current period consolidation adjustments. Generally, the determination of the goodwill and the calculation of the capital reserves of the B Limited is permanent adjustments. Okay, permanent adjustments as is a first time occasion and subsequent occasion with change in the shareholding particular of entity. Question is asking which is not in current period adjustment. Nothing but answer is determination of the goodwill and capital reserve. Okay, according to the condition, the entity will not continue in the future, so that the entity prepare the financial statements on as per the liquidation with a sufficient disclosure. Impact on audit report is nothing but issue the unmodified opinion, clean report. Whenever the financial statements is prepared on the liquidation basis, that entity will not continue in future, you may issue the unmodified opinion, that is clean. These are the general points to be kept. First of all, what are the major reporting under the CARO? Auditor must report the unspent CSR amount, and next classification of the advances and statutory dues, whether the disputed and undisputed, and fraud cases also, and loan term utilization, term loan utilization, and included systematic adequacy to be reported. And if there is any kind of the reporting of the revaluation of the PP and intangible assets are required to be reported only in the case of more than exceeds 10% of net carrying amount. Answer is net carrying amount with a valuation by the register officer. And non-consolidation of a subsidiary, if there is a non-consolidation of subsidiary in a CFS, if it's a material proviso required to be qualified or adverse opinion to be issued. These are the reporting requirements in the core. Okay, and auditor must consider the management plan as a feasibility when the going concern, when the assuming the going concern and unwilling of the management to provide assessment lead to modification opinion. Okay, and next, what are the types of the opinion? Qualified opinion when there is a misstatement, material but not pervasive, and adverse opinion when there is a material misstatement, material and pervasive both, and disclaimer when unable to obtain sufficient appropriate audit evidence. Okay, both it could be material and pervasive. These are the reporting. Okay.